and that difference is a decrease. Now, according to my formula, a decrease in accounts receivable should be added. So I'm going to add these two numbers together. And what I get there is 1,762,200. So that's going to be my cash received from customers. 1,762,200. So I'll just plug that in. So that's where that number comes from. So if I go back down here and look at that calculation one more time, like I said, that's just the sales. And then we said there was a decrease in accounts receivable. I added that. Why did I add that? Because remember my formula. Sales, it said if there was a decrease in accounts receivable, that was to be positive. So always go back and double check, look at your formulas. That'll help you get that number. Of course, if you make a mistake, you'll know it. And I'll show you how you'll know it. When we finish this, I'll show you how to check it. So that completes that one. Now, the next thing that I need is my cash paid for merchandise. So what does my formula say about cash paid for merchandise? Well, that's the next formula. Cash paid for merchandise, we start out with cost of goods sold, but then we have a lot to consider. We got to consider the merchandise, and we got to consider the accounts payable. If there's an increase in merchandise, that will be added. A decrease in merchandise would be subtracted. But with accounts payable, it's the opposite. A decrease would be added, an increase would be subtracted. So we have to consider all these things. So cost of goods sold, where's that going to be? That is going to be on my income statement. The very second thing right below the sales, cost of goods sold, $425,000. So I'm going to go down here on my statement and down here so I can do some extra calculations. And I'm going to put the $425,000. Now, one thing I'd point out about this, notice the $425,000 is negative, and it's negative because it's being shown on the income statement. We're showing that it's being deducted from sales, but for calculation purposes, I want to use the absolute value, which is $425,000. The absolute value of anything is the positive number. Now, below that, I've got two things to consider. I have to consider merchandise and accounts payable. So on my balance sheet, where's my merchandise? It's an asset. It's the third asset on there, merchandise inventory. Now, last year, it was $266,000. This year, it's $245,000. So it decreased from 266 to 245. So that means that it's a difference there of 21,000. So it decreased 21,000. And what did my formula say about a decrease in merchandise? It said a decrease in merchandise is to be deducted. So I actually want to put that as negative 21,000. Then I have to consider my accounts payable. Well, that's a liability. In fact, it's the only liability that I see as far as current liabilities on this balance sheet. Now, their accounts payable previously was $105,200. Now it's $18,500. So it also went down. It went from $105,200 to $18,500. So that is the difference there. Actually, let me go back and make sure. $105,200, $18,500. That is going to be a difference there in total of $86,700. And that $86,700, which is just the difference between these two, that is a decrease because the accounts payable went down during the year. Now, what does my formula say about a decrease in accounts payable? A decrease in accounts payable is to be added. So I'll just leave that as a positive number. So ultimately, what I have there is $490,700. So I'll go back up here, and for cash paid for merchandise, $490,700. Now, I'm going to put this on here though as negative $490,700. Why am I putting that as negative? Well, to understand that, I got to explain that because that's one of the most commonly made mistakes when you do a statement of cash flows. See, there's a big difference between doing a calculation to get a number and the way that number is presented on the statement. See, we calculated, yes, the actual cash that was paid for merchandise is actually $490,700, but on the statement of cash flows, it's an outflow of cash. See, notice any of these titles that say cash paid, notice that the number is negative. So you always look for that. You always want to make sure, because if you put that number as positive, things aren't going to balance, and I'll show you what I mean by that shortly. If you didn't have that number as negative, you wouldn't be able to get the right check figure at the end. So that's going to be the way to help you realize if you've made a mistake. Now the next item, cash paid for other expenses. Well, we've got a formula for that. Cash paid for other expenses. You have the operating expenses, which are like the other operating expenses. Then you've got to look at the prepaids and the accruals. So where are our other operating expenses? Well, we look for our other expenses. Those are going to be on our income statement under operating expenses. We've got depreciation. We don't want to use that. We want to use other expenses. So even though the formula says operating, really it's other operating expenses. So make sure you're using the right amount. Other expenses. That is $345,000. So on my calculations down here, I'm going to put $345,000. Now I'm supposed to consider the prepaid expenses and the accruals. If I look on my balance sheet, prepaid expenses are an asset. They are the fourth asset on this balance sheet. Last year they were $18,000. This year they're $13,500. So they changed quite a bit. They declined from $18,000 to $13,500. So $18,000 minus $13,500, that's a $4,500 difference. And that is a decrease in prepaids. So the formula says a decrease in prepaids is to be negative. So I'll make that negative $4,500. I'm also supposed to consider any accruals. Well, when I look at this balance sheet, I don't see anything on here. I see assets, liabilities. I don't see any accruals. So that means this company doesn't have any. So I don't have to do that. So I'll just simply do an at sum, net this together, and I get $340,500. So this is going to be $340,500, but I'll do this as negative because this is cash paid. Now one thing I'll mention about that particular formula, notice that I didn't have any accruals, and that's because when you look at these formulas, not every company is necessarily going to have every single one of these. You know, you may not have a company that doesn't have a particular item that goes in that category. So these formulas, you know, are here for the sake of completion, but not every company is necessarily going to have every single thing that you would need to include. If they don't have it, we can just leave it out. Now, the next thing on my statement, this is on my direct method statement. I have one more item here for this company, and it says cash paid for income taxes. So I'm going to look at my formulas. Now notice we also had a formula, cash paid for interest. I'm not going to end up using that formula in this particular example because this company doesn't pay any interest. So again, if the company doesn't pay certain things, we just leave it out. These formulas are for every possible scenario. But I do have taxes, so I'm going to look at the formula for cash paid for taxes. And it's going to be the tax expense. Then we're going to consider the taxes payable. So on my income statement, where would be my income taxes? Right here near the bottom. Looks like they paid $23,000 in income taxes. So on my direct statement, I'll go down here and type in $23,000. That's my starting point for that calculation. Then I'm supposed to look at the taxes payable. That would be a liability. Well, when I look at their balance sheet, I see accounts payable, I see notes payable, I don't see any taxes payable. So they don't have any taxes payable. So again, not every company is going to necessarily have everything that the formula asks for. Well, in this case, this is a good thing. It means I don't have to do any more calculations. I can just literally use that number, 23,000. So I'll go up here and plug in the 23,000, and again, this is cash paid for taxes. So it's going to be a negative 23,000. So now I'm ready to net together my operating activities. And from that I get 908,000. And that completes at least the direct method version of my statement of cash flows. Now, once I've completed that, how can I check this to make sure that it's right? Well, there's one way that you can check this. And the way to do this is, remember, I have 3 different activities. I have operating activities, investing activities, and financing. I brought in 908,000 positive overall from my operating activities. I lost 8,000 on investing. I lost 26,000 on financing. I want to net those 3 numbers together specifically: the operating activities, the investing, and the financing. I want to net those 3 together. And when I do that, what number do I end up with? 874,000, which is exactly the same as the net increase in cash. So that is the way to double check that your built-in check and balance on your statement of cash flows. It always has to come back to that net increase in cash. So that just lets me know this particular version of the statement of cash flows is finished and it is correct. So that takes care of the direct method, but we're still not finished because we also are going to do a direct method version. Now, we already have quite a bit finished on the direct or the indirect method version. We've got the entire bottom half finished, all the investing, all the financing, the cash, because remember, that part of it is not going to be affected. The only part that's a little different is the top part, and that's the operating activities. We're going to do this in a different manner, but the good news is we're still going to get the same answer. Now, this method is completely different. Let's take a look at the formulas for this method. They start all the way down here on the bottom. Indirect method. It says net income then. So basically you start off with the net income and then you make a whole series of adjustments. In fact, we have a place right here for the net income. So we're going to put that in to start with. So I'm going to go to my income statement and find the net income. It's the bottom line on the income statement. 914,000. So I will plug in the net income of 914,000. And then I'm going to have a whole series of different adjustments that I'll have to make to the net income. Now look at what they're asking me for here. It says decrease in accounts receivable. I want to know how much did accounts receivable decrease during the year. Well, we've actually already looked that up once before, but we'll look for it again. Remember, my accounts receivable, that's on my balance sheet. It's right here. It was 83,200. It went down to 71,000. So it decreased, and it decreased how much? $12,200. Now, how do I know that it was 12,200? I could get that number a couple different ways. I could deduct that, but also I actually have already calculated that. Remember when I did these formulas? Right there was my decrease in accounts receivable. So that's where that comes from.